Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a rejection at the recent range high at 12 to 14, and on the downside, we saw a break below the recent range low of 98.75. At this point, heading into the open, we are going to be using the 97 quarter to 2000 quarter as the short-term bull bear zone to establish our directional bias. We know that in the overnight session, the sell side has been more dominant, and heading into the open, if we are continuing to see downside momentum where the NYC tick is completely below zero and it's printing some decent negative values, and the AD line is actually trending lower, and we fail to hold this 97 quarter, 2000 quarter area, and specifically within the 97 quarter, the 98 and 98.75 levels are more significant. If we fail to hold those, then on the downside, we could see a move into the 88.5 to 91. That is the breakout area from a few days ago, and is really going to be the key spot for buyers. So it is an area where responsive buyers can be active on first test, even if we get a short-term breakdown. Now, if we hold 97 quarter, 2000 quarter, then that would tell us that the market is still trading within the recent range. That we haven't actually broken the recent balance. So in the overnight session, we poked below it, but that's not sufficient to really consider this a market where the sell side is now in control. So if buyers can maintain 97 quarter, 2000 quarter today, then we can still see moves back up into the 0608 pre-market resistance zone, and from there back up towards the 2010 level, which is a level that really started the downward momentum in the overnight session. We have the gap at 2011, and then the top of the range at 12 to 14. So each of these levels and zones needs to be dealt with one by one. It's not necessarily the case that the market will likely just slice right through all of them, but if it does slice through 06 to 08 on the upside, then that would be a good indication that strong buyers are stepping back into the market, and it would be a bullish signal, and that could bring the 2011 gap and the 12 to 14 area into play. Now 12 to 14 marks the top of the balance, so that's really the key resistance zone on the upside, and that's the area that buyers would have to take out in order to basically confirm a balanced breakout from this recent range and actually bring some of those higher prices into play. But for now, heading into the open, that is not the scenario we're concerned with right now. We're really just dealing with this 97 quarter to 2000 quarter short-term bull bear zone, and really need to focus in and see how the market responds to this zone, because it will help set the tone for the day. On the upside, we're not focused on 12 to 14. The first zone that we have to be concerned with is 06 to 08. The 2007 level marks the high volume node of this recent 3-day balance. So 06 to 08 is really critical short term, and how the market deals with that will also help us figure out the state of the market, or the underlying strength or weakness of the market. Even if we hold the 97 quarter, 2000 quarter, but then completely fail at 06 to 08 and come right back down, that would still leave the door open for a short-term balance breakdown and a move into 88.5 to 91. So, today we have to be pretty flexible with our short-term directional bias, because we know that bigger picture, the buyers have been in control over the last couple of weeks here. But short-term, we're trading in this small range, and now today is kind of that decision point where we see whether this range low can hold. Now keep in mind it's only a 3-day balance, so it's not like breaking below that necessarily has to completely reverse the recent trend, and that's exactly why the buy side can still be active at 88.5 to 91, and as well as the support zones below that. But short term, off the open, this micro bull bear zone is really going to help us figure out the short-term directional bias. And again, unless we're getting strong downside momentum, where we're really seeing the sellers press, by default, since we're trading near the balance low, responsive buyers can be active. And that's why we have to be careful and not get trapped by shorting the market at too aggressive of a price if the underlying environment is not really showing signs of a balanced breakdown. Now the AD line is going to open on a negative note anyway, right? You're set to open on roughly a 10-point gap or so. So it's going to open at a negative value. That's a given. So what we really have to look at if you are watching the advanced decline is whether it continues to trend lower off the open. Looking at the other markets, we'll see, are they holding their overnight balances? Are they holding the overnight VPOCs? Things like that come into play. And from a price standpoint, the 97 quarter, 2000 quarter area is really key for the buy side. If they fail to hold that, then it opens the door for the 88.5 to 91 test. And depending on how we approach that zone or how weak things are on the day time frame, we could even go lower. But even on the downside, we have to deal with it one zone at a time. The 94.5 to 95.5 is a very minor zone, so that would really only be an active zone for us if the underlying environment just wasn't supporting the idea of a strong breakdown, or if there were a very large positive divergence heading into that zone or something. Otherwise, that zone is not really going to be an active zone or a zone where we actually take any action. So those are the main ideas heading into the open. So 97 quarter, 2000 quarter on the downside is key. On the upside, 06 to 08 is the short-term inflection point, and how the market reacts to those areas is really going to help set the tone for the day. So let's see if this dominant side we've seen in the overnight session, the sell side, can really maintain that short-term control. They are the side that really has to press here in order to continue lower. That'll help set the tone for the day, and we'll take it from there.